Hello, everybody. It's Taiwo Okwa, founder of Minty. Thank you very much to all of you for the new followership on IG, LinkedIn, and all the social media platforms. It's great to be back. I hope you had a fantastic summer and we're all back into full swing of work. Excellent. So, in today's video, I am going to be sharing with you the key risk of investing in commodities. If you recall from my last video, I talked about commodities as an asset class and the benefits of investing in commodities as an asset class as an investor. A number of the things I mentioned was around the fact that commodities are good inflation hedges. So essentially, when inflation are going up, commodities are a good pick for you to include in your portfolio because they tend to do better. So I hope that was very informative and useful. So now to the content of today's video. In today's video, I am going to talk about the risk of investing in commodities because, as you know, investment is all about risk and reward. You need to understand the key risk of putting your hard-earned money to work before you can make some specific decisions. So now to the key risk of investing in commodities. Number one key risk is that commodities are typically highly volatile. The prices can go up and down due to a number of factors. So it's important for you to understand this before you consider investing in commodities. Commodities prices are influenced by a number of things like weather, referring to key agricultural products I spoke about like cocoa, palm oil. If something devastating happens to those crops, then they're not able to produce and not able to sell. So that's one of the key risks of investing in commodities. The other aspect is around geopolitical risk. If you think about crude oil and what's happening in the world today with the U.S., Iran, OPEC, so geopolitical events also affect certain kind of commodities. So it's important that you understand that as well. The other aspect is a key risk about commodities, uncertainty about inflation as well. So when inflation are rising astronomically high, the commodity prices might not be able to rise as fast as this inflation as well. So it's important for you to understand some of the key, risk about commodities. Another interesting factor about commodities, is the fact that you as an investor needs to understand your risk appetite. What do I mean? How much risk are you willing to tolerate? If something is very volatile in price, it means that you can't afford, you can't afford to put so much of your capital into it without understanding what you're doing, right? So it's important that you have a very high risk tolerance. You can tolerate risk, and you don't have to monitor the markets every day if you want to play in the commodity space. I'll give you an example. Some people love bungee jumping, and some people don't even like traveling on airplanes because they can't just stand it. So that's a very, big dichotomy between somebody who is highly risk averse, they don't like taking risk, and somebody who loves risk. So if you have a high risk tolerance, you have a long-term investment horizon, meaning you can afford to invest for 5, 10 years or 15 years. I would say include commodities in your portfolio. So that's a very interesting and a big tip for you there. Long-term horizon, high risk tolerance, invest in commodities. And I'm sure you're gonna ask, so how do I go about this, Tyro? This is all very interesting, right? I would say as a new investor, you can start off by, investing, through a fund. There are a number of commodities funds out there, but be very, very careful, right? Because due diligence is always important when it comes to investing. Do your research about their track record. What have they done before? What is the length of time of their commodities fund? What is the infrastructure? Who are the managers? What is the experience? Is it a startup shop, or have they been in the game for a long time? So you can start up by investing like a commodities fund as a new investor. The other aspect is if you want to be very adventurous, you can pick one or two commodities to try out. I would say as an indirect exposure, which I covered in my last video, is for you to buy the stocks of big commodity producers. There's so many examples of them out there, right? You have the likes of BHP Billiton, a very large commodities company that produces and invests in a broad range of commodities across the world. So they have investment in gold, copper, silver, everything. So you get an indirect exposure if you buy the stocks of BHP. You buy, Anglo. There are also a number of good producing stocks out there, BP, Shell, if you subscribe to some of their philosophies. That's also important as well, that you subscribe to the philosophies, right? You know what their management are doing, what is the future direction, are they embracing new technology with respect to renewables, etc. So investing, like I said, it's about understanding your own unique circumstances, your own values, your own investment horizon, your risk appetite. It goes on and on. So is it very interesting? Do not be phased. So yeah, so that's about it. Those are the key risks of investing in commodities. So very high inflation, prices might not keep up, geopolitical events, prices could fluctuate because of bad weather for agricultural commodities. So it goes on and on. But I would say it is a very good asset class to put in your portfolio. You can't afford to ignore it because it brings diversification, right? It reduces the risk overall. So on that note, I do hope you enjoy learning about the key risk of investing in commodities, and let me know any other topics that you want to know about from Minty on investing tips, budgeting, how to go about spending your developing your spending habits, changing your money mindset. I'm here for you, and I look forward to engaging with you more, in this last part of the year. And I hope you really enjoyed it, and have a fantastic and wonderful Saturday and the rest of your weekend. Thank you. Bye bye.